What's up, guys? Eric here, Mr. Fired Up Wealth. Today, excited to bring you a new mini series. Going to bring you a 2-video series that's going to cover the top 10 cloud stocks, SaaS stocks, software as a service stocks that I'm going to hold in my portfolio for the next 5 to 10 years. Now, these are stocks we've been buying in Discord. They've made a little bit of a run from here. So you might want to wait for a pullback or dollar cost average. But these are my top 10 cloud growth stocks to have in a portfolio and a long-term investing growth type portfolio that you might want to consider on the next pullback. You're going to want to watch this video and this series. Without further ado, let's get started. All right, guys, so before we get started, I want to remind you to please subscribe to the channel. You're not going to want to miss the second video in the series. Please do comment below. If you like the video, drop me a like. Let's get going. All right, guys, if you've been following the channel for a while, you know I've been bullish on these cloud stocks for a long time. And Salesforce is number 10. Salesforce has been inexpensive for a long time. You had plenty of opportunity to get into the stock. So most of the stocks we're going to talk about in this series are going to be stocks that are probably a little overextended. You might want to wait for them to pull back. Now, Salesforce has made a nice pop from its lows, but it's, in my opinion, not necessarily expensive at these levels. So this stock here, Salesforce, number 10, CRM is the ticker. It's not a terrible price in this range, around $250. I think longer term, it's a good buy. If you look at the stocks on this list, it's going to be the least expensive stock, although it is more of a mature growth type stock. Another stock I like in this category, and again, if you like these stocks, check out the channel because there's a video for every one of the stocks that I'm probably going to cover in the series. There's probably a video that already talks about them in more detail. So this series here, this 2-video series is going to be very high level, just boom, 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 try to get the information fast. So Salesforce is one that I've liked for a while. Adobe is another one. ADBE, those are both kind of mature growth type stocks. But if you look at the numbers, you know, they've got really decent growth for the valuation, very established companies. I like Salesforce. They're going to be acquiring Slack, and this is part of the reason why the stock has had volatility. People are nervous about the price tag on Slack. So what you see on your screen here is from the 2020 shareholder letter from the CEO, Mark Benioff, and he's writing to the shareholders, "Our exceptional growth last year is rooted in our own example, how we transformed our company and achieved success from anywhere right here at Salesforce. When the pandemic hit, they pivoted and developed a new operating model. They used Sales Cloud to engage with customers from anywhere, having millions of conversations to ensure we remain relevant to their success, to the client's success. We used Marketing Cloud to market from anywhere, creating new digital experiences like Dreamforce to you and hundreds of leadership events that have been viewed nearly 500 million times. We built an incredible new platform called Hyperforce with new data centers," this is important here, "opened in India and Germany, and 10 more planned for this year in 2021, allowing our customers to manage their data from anywhere." So this next piece here is really important because it talks about Slack, and this is a lot of the reason the stock has had some drama over the last several months. "With Service Cloud, we manage our own caseload as our own business continued to accelerate throughout the year. And as a customer of Slack, we use Service Cloud with Slack to improve case time close rate by 26%. Slack is the central nervous system for the new world of work, connecting people and data across systems, apps, and devices from anywhere." So it's going back to the work from anywhere. You think of more and more, especially millennials, but younger people in general, even Gen X, even some older than Gen X. I'm a Gen Xer, but we're working more from anywhere. We're having that hybrid type remote work environment. And this is really the central nervous system, they're calling it, of that work from anywhere environment. "After we close the acquisition, we'll build Slack into our products and help our customers become even more productive from anywhere. And we're going to create the most open and interoperable ecosystem of apps and workflows and enterprise software." This is a powerful message. This is why I think the stock is a good long-term investment. The leadership team at Salesforce has proved themselves time and time again. Every time they make one of these big acquisitions, whether it's MuleSoft, whether it's Tableau, there's always been fear in the markets because they're paying too much. And you look back now and all the acquisitions for the most part that Salesforce has done, not only have been successful, but they also look inexpensive, in the rearview mirror. And I think it's going to be the same thing with Slack. There's always fear. but I have confidence in the management team. Coming from this background, from this industry, working in SaaS, in cloud, I feel like I have a better understanding of what they're trying to do with Slack. And I feel like sometimes the overall market, maybe even some of the analysts, don't completely understand how this can be integrated with cross-selling and built into their applications to really make a really powerful, unique system. Salesforce is already the best of breed when you think of CRM, customer relationship management, and the acquisition of Slack is really only going to make them even more of a powerhouse in the CRM space. All right, guys, just some quick numbers here on Salesforce. It's trading right now around $251 a share. It's up about 30% year to date. It was beat up for quite a while and it's starting to recover. You can see that the market cap's around $230 billion, so it's a pretty large market cap. The PE ratio is just under 52, which for the growth, I think is pretty reasonable. If you look at this most recent quarter, they had about 22.5% year-over-year revenue growth. They had about a 7.87% net profit margin. So if you add that together, it's just over a 30, which isn't quite rule of 40 for a quick and dirty rule of 40, but it is very reasonable, again, around a 50 P ratio. You had lots of opportunity to buy it lower. It's starting to make an uptrend. I think by this time next year, it's still going to be much higher. It's one of those sleep well at night, growth at a reasonable price type cloud stocks, more of a mature type growth stock. If you want more information on Salesforce, check out the channel. We've got a video. There's a link above. You can watch this video and more detailed analysis on Salesforce. Don't forget to subscribe to the channel. Hit the like button and comment. Let's move on to the next stock. Number 9 is DocuSign. It's probably one of the more misunderstood stocks on this list. And it's just, when people think of DocuSign, they think of it as just a simple e-signature type of tool, but they're doing a lot more than that. And I'm going to get to what I mean here in a second. It's going to help paint a picture of what's going on at DocuSign. Before I do that, the reason they've surged over 35% in the month of June is because they had a really strong quarter this last earnings. So their total revenue surged 58% year over year to $469.1 million, with subscription revenue making up more than 96%. That was up from 94.6% the year prior. Their gross margins improved to 77.6%. That's up from 75.1%. And here's the big one, guys. Here's the huge one. They narrowed their loss from $47.8 million to $8.4 million. That's a very big deal. Let's dig into more about what DocuSign is all about. All right, guys. So here's the thing with DocuSign. They've really rapidly deployed their contract lifecycle management platform to generate agreements and to track version edits, okay? So one can make the case that we're really seeing kind of an emergence of a new platform. And that's really the way I view DocuSign. It seems like it's one of those things where it's just at the cusp, like a turning point, a tipping point, where it could really be the next big thing that everybody uses. So DocuSign is capable of monitoring, capturing, reporting, doing all that across the board. And it's one streamlined path for a document. So this cuts a lot of time out for the consumer. It also cuts a lot of costs with having to track all that information. You can track edits. There's lots of different things you can do. If you look at your screen, you can see it's the world's #1 e-signature solution. There has been a lot of increased competition from Dropbox has something now, Adobe has something now, but these guys really are #1 and they're best of breed. And they're starting to do new things to differentiate themselves and offer more products and services. You can see this amazing quarter they had this last quarter. We talked about here, 58% year-over-year growth. The billings are up. The net dollar retention is 125%. In the middle, you kind of see there what they call Agreement Cloud. Manage, prepare, sign, and act. It's doing the entire life cycle. And they're looking at the total addressable market, the TAM, to be about a $50 billion opportunity. I think this slide here does a really good job of showing you all the possibilities of where you could do business with DocuSign, from sales, marketing, legal, product management, procurement. If you look at your screen, there's a lot of information on there, and it really covers anything. And there's so many things that you don't think about. Real estate is one where people want to use, DocuSign to do a real estate transaction. When I just sold my house, even this was 3 years ago, back in 2018, we sold a house and bought a new house. We used DocuSign for everything, and it was really handy. Previously, before that, it had been many years, and we had to do everything the old-fashioned way, go into a title company, do it all. And it was just really nice having that e-signature capability. But you think of like NDAs, like through the whole hiring process, especially with COVID and work from home, work from anywhere. Of course, this company was accelerated from COVID. But if you look at all the capabilities they can do across all these different industries, these solutions, I think there's a lot of opportunity for this to be part of our life moving forward. And just one more quick here, the next must-have cloud platform. And it's showing front office and back office, everything from marketing to HR, ERP, everything, service, sales. That's coming and funneling all into that agreement process and then to the agreement cloud. So they're making a strong case here, and I definitely see a lot of possibilities for DocuSign moving forward. Okay, sorry. One last one here because this is really good. So this is showing you that prepare, sign, act, and manage we talked about earlier. I think it does a good job. So you think of prepare, you've got your guided forms, you think of sign, you think of e-signature, but also identity. And, identify, make sure that it's the right person. And then notary, that's brand new, right? So they're the leader in e-signature, but what about identity management with signing? What about notarization? And then act, CLM, payments, you got manage, insight, and monitor. And if you look down, you can see the integrations with Salesforce, Microsoft, Google, SAP, Workday, hundreds more. Industry solutions from financials, life science, government, real estate, mortgage, all their APIs. APIs help software basically communicate and integrate, right? So you think of all these different ones: identity, rooms, webhooks, workflow, etc. Platform, you got infrastructure, administration, authentication, service protection, repositories, search, machine learning, 508 compliance. The more you dig into DocuSign, the more bullish you'll get. Number 8 is one I've covered before. I have a video on the channel that compares Band and Twilio, but Twilio is one that I really do like. I do own a decent amount of Twilio. It's headquartered in San Francisco, so it's San Francisco. Twilio, like Bandwidth, is one of the leading, they call it platform as a service, or PaaS, and it focuses primarily on communication services. So connecting, you think of like Uber, right? And you think of DoorDash, trying to connect those businesses from your phone to the actual business. This is what Twilio is all about. So Twilio provides APIs for sending, receiving, and tracking text messages programmatically. It's a big word. Programmatically the world over. Additionally, Twilio allows you to test your SMS-enabled applications within a sandbox environment. Twilio has also put in place speech recognition, making it possible to translate a user's voice into text. It offers software layer for connecting and optimizing communication networks globally. Some service highlights real quick. I'm not going to go into a lot of detail. If you want more information on Twilio, go check out the video. The slides that I'm showing you right now that I'm reading to you are actually from that video, so check it out. There's a link above. So it's well-built product, extremely reliable. This is really the best of breed. Simple to configure, multiple accounts. Send and receive text messages APIs, powering 65 billion plus messages per year. Advanced call control for real-time APIs to receive, initiate, and control calls. Convert speech to text, as we mentioned earlier. So you can also route calls from your existing infrastructure, and you don't need to migrate hardware or carriers. So this is big for some customers. Also, instantly acquire local, national, mobile, and toll-free phone numbers in more than 100 countries with one single API. And you can use your existing toll-free number or a new Twilio number in the United States, United Kingdom, and Canada. But check out Twilio. It is expensive at these levels, but I do like this one long-term. Number 7 is one I recently covered. It was actually my very first Motley Fool article, and it's the trade desk. Now, since we did this video, there's been a split and the stock has run up over 50%. So it is expensive here. Be careful chasing it. It literally just ran 50% in a month. So keep that in mind. So this video is focused really on the top 10 stocks that I would buy for long-term investing, that I would buy maybe on the next dip, and I would dollar cost average. So you always buy small positions, 1/5, 1/4 at a time, and kind of back your way into a good cost basis. But the trade desk, some highlights from the most recent quarter. They were talking about cookies going away. Now, since this video, there's actually been an extension from Google. They're pushing it back a year. So that's a big positive, which was one of the catalysts. The stock split, and then the cookies news was, there was 2 catalysts that really helped the stock climb higher. Now, talk about Unified ID 2.0, which will still be important at some point in the game here once Google does decide to get rid of the old cookies. They had $1 billion in 2021 revenue, so that's very, very good. CTV is a huge opportunity for them. You think of, Roku, and you think of streaming TV. That's basically a TV that's connected to the internet. This is going to be a huge opportunity for them. They just had this 10-to-1 stock split. $26.4 billion market cap when I did this video last time. Now the stock today is trading at $77. When this video was made, it was trading at $480. So you did a 10-to-1 split, but essentially it's a $770 stock based on the old price. It's gone from $480 to $770, a big run. from this video about a month ago. Now, the PE ratio as of right now today is 158.40, and the market cap is 36.64 billion. So you can see the market cap when I did this video last time was 26.4 billion. It's now 36.64 billion. So it has made a massive run. The PE ratio, as I just mentioned, is 158. It was 114. Revenue was in this last quarter was 1.14 billion. And the price of sales at that point was 23. It's much higher now. 80% gross margins this last quarter. And I still think that this will be a 5 to 10 bagger in the next 10 years. Of course, if you would have bought when the video was made, you would already be up a nice percentage, but I still think you're going to get a 5 to 10 bagger over the next decade on the trade desk. Okay, next I'm going to cover number 6, which is Zoom. Make sure you subscribe because you want to see the next 5 videos in the series. So my top 5 are going to be coming next. Drop me a comment and let me know if you agree with these so far, and let me know which stocks you think should be in the top 5. I've already got my list decided, but I'd love to hear your feedback. So drop a comment below. Make sure you hit the like button. Definitely subscribe to the channel. But number 6 is going to be Zoom Video, ticker ZM. Now this stock has been beaten up for a long time. It was almost a $600 stock. It dropped down below $300. We were buying it in Discord below $350. Started buying it a little bit early, but dollar cost average. Now I'm actually up nicely on Zoom, have a decent position in the company. The thing about it is it's the ultimate work from home type stock. And so it's one that was fueled by the pandemic. But if you look at the valuation, look at the price of sales, it's trading basically, well, at least it was before it's made it run up now. It's actually trading over $400 a share. So it's made a nice run. And again, it's one that you might want to wait if there's some kind of a pullback. I like it, 350 and below, whether you'll see that price again or not. Hard to say. This is why you should be in Discord, because Discord, I'm buying these stocks. Now we're talking about them, later, but these are ultimately stocks I'm be holding for, 5 to 10 years. So the stock's going to go much higher in my opinion than $400, but you just have to be careful with chasing and making sure you're buying at the right times. Charlie Munger says he's in love with Zoom. Now, if Charlie Munger is in love with Zoom, it doesn't mean I'm automatically going to buy it, but it's hilarious because you think of technology and you think of Buffett and you think of Munger. They're not exactly technologically advanced, and they think Bitcoin is bad and they think this and they think that. But I thought this was really interesting. Charlie Munger says he loves Zoom, thinks video conferencing trend is here to stay. I agree with him. And if someone that's as old as Charlie Munger can see that, I think that you should be able to see it too. Because I don't know how old you are, but you're probably younger than Charlie is. And if Charlie gets it, you should get it too. The thing about it is there's going to be hybrid work. There's going to be work from anywhere. There's going to be meetings that are going to be done on Zoom. It's a subscription-based, software as a service, SaaS type play. So, organizations that have subscriptions to Zoom aren't just going to cancel their Zoom subscriptions. They're going to keep them. They might not use it as much, but they're going to keep them. I talk to people like my wife who uses Zoom for her work, lots of my friends, and they all agree that, they're still going to use Zoom in some capacity, maybe not as much, but virtual teams were a thing before the pandemic. When you think of work from home, work from anywhere, we talked earlier in the video, all these stocks really are about the work from anywhere, the new workforce 2.0, the gig economy, especially younger people wanting that flexibility with their career and their job to be able to work remotely. So you're going to see people going back to work. There's no question you're going to see people back in the office, but there's a few things. Number one, I think that there'll be more hybrids. So maybe you'll work from home part of the time, work from the office part of the time, get the best of both worlds. Business travel will eventually start to pick up, probably not until maybe later this year, probably even next year. If you look at TSA and you look at travel, just this last week, we finally got back to pre-COVID levels, to 2019 levels, but everybody will tell you that business travel is still down significantly and that hasn't fully recovered. I think that business travel will recover over time slowly, but I think some companies realize that you don't have to necessarily, like when I used to be in sales for SaaS, I would travel all the way to New York or San Francisco, literally for a 60-minute meeting. There was times I literally flew from Minneapolis to San Francisco or to New York, literally got into a cab, went to a meeting, did a 1-hour meeting, went right back to the airport and flew right back home. I did it all the time. And you think now people are more comfortable with like, hey, Eric, you don't necessarily need to do that. You don't need to fly all the way out here. For this first meeting, let's just do it over Zoom. When we get closer to the end game and to signing contracts, maybe you come and do a lunch and learn or something at that point. So I think you're going to have a hybrid of that too. Instead of traveling every time as a salesperson, every time being face to face, you might do some of those initial meetings more on Zoom meetings and things like that. There's no question in my mind that Zoom is here to stay. There's of course a lot of competition. You think of WebEx and you think of RingCentral. I also own RingCentral. There's a lot of players in the space. Even Adobe has their own. If you think of Adobe, I mentioned Adobe earlier with Salesforce at number 10. Adobe is a great stock because it covers so many different things. They're doing e-signatures. They're doing video conferencing. They've got all their Adobe Cloud solution. So there's definitely competition for Zoom, but Zoom it's a verb, right? I'm going to go Zoom my grandma. I'm going to go Zoom my coworker. You don't say I'm going to go WebEx. I mean, you used to, but Zoom is kind of the new thing. And you think of Zillow Group, I'm going to Zillow my house. I'm going to Zoom a friend. It's just one of those things that we now use as a verb. It's kind of ingrained into our culture and our society. And I think Zoom video is here to stay. It's number 6 on my list. It's trading over $400. I personally would wait for a little bit of a pullback. With that said, this is on an uptrend now. Always dollar cost average. Just don't chase, no FOMO. Dollar cost average, and it's one that I'm going to hold for 5 to 10 years. All right, guys, there you have it. Those are the first 5 in this series. Now there's going to be my top 5 coming up. So I just covered number 10 through 6, and I'm going to cover in the next video, I'm going to cover 5 to number 1. So my top 5, the best 5 stocks are coming up in the next video. So you're going to want to subscribe to the channel. Make sure you don't miss that. Please drop me a like if this video is helpful. It helps me a ton with the algorithm. If you drop me a comment, that's even better. Even if it's just a thanks, Eric, or a nice video, just something short and sweet. It helps the algorithm. I appreciate your time and attention. I hope you have a great rest of your day. Take care.